WTI traders may have noticed the marked fall of the commodities price. In the coming report, we intend to have a look at the state of the US oil market, yet also on an international level, and discuss factors on the demand and supply sides that drive oil prices. To conclude the report, we will also provide a technical analysis of WTI's daily chart. The state of the US oil market seems to have been maintained. Characteristically, the number of active oil rigs in the US dropped by 2 according to Baker Hughes from 508 to 506. The drop of active oil prices seems to imply an easing of the demand side in the US oil market, thus may have a bearish effect on oil prices should it intensify. Furthermore, we note that US oil reserves have increased for the second week in a row according to API. Also, EIA reported an increase of US oil reserves, yet EIA's increase was narrower. Overall, the data mentioned tend to highlight that oil production levels have surpassed aggregated demand for the commodity, which could be viewed as a bearish for oil prices. Should we see the data regarding the US oil market show a continuance of the slack, we may see them having a bearish effect on oil prices. In our last report, we had highlighted a possible Iranian attack of Israel as possible factor that could create support for oil. It should be noted that market worries for the tensions in the Middle East seems to have eased since the counterattack of Iran to Israel. The attack may have been less impactful than expected by the markets, explaining thus the slipping of oil prices on Monday. Please bear in mind that Iran's attack was massive, yet Iran had warned in advance for the timing of the attack, and Israeli forces were able to defend rather successfully. Iran also mentioned that the attack is a once-off unless Israel retaliates, in which case Iran may have to respond within seconds. It should be noted that US media highlighted the possibility of any Israeli attack on Iran to be delayed until the end of April, beginning of May, given the Jewish holiday of Passover. That may also allow market worries to ease somewhat, yet at the same time tensions are expected to keep shimmering under the surface, which may lead to continued sensitivity of oil prices and possibly unexpected spikes from time to time. On the production side of the international oil market, we know OPEC's intentions to keep production levels low. OPEC's intentions are expected to keep the production side tight and thus could provide support for oil prices. Furthermore, the organization seems to expect supply from oil-producing economies that are not OPEC members to drop, making the supply side of oil even tighter. The situation intensifies further as OPEC expects oil demand to be robust over the summer, a scenario that may provide an additional push higher for oil prices. Characteristically, the Organization of the Petroleum Exporting Countries in a monthly report said world oil demand will rise by 2.25 million barrels per day in 2024 and by 1.85 million barrels per day in 2025. All of the above could have a bullish effect on oil prices. Please note that the Oil Production Organization seems to be aiming for a possible inclusion of Namibia, which in turn could widen somewhat OPEC's grip on the international oil market. WTI's price fell yesterday, aiming for the 80.2 support line. It should be noted that the price action in its fall broke the lower boundary of the upwards channel that was supporting the price action bullish movement since the 5th of February. The slight bearish tendencies during today's Asian session tended to underscore the interruption of the commodity's upwards movement. Hence, we switch for the time being our bullish outlook in favor of a sideways movement with the possibility of it turning bearish. Yet for a clear-cut bearish outlook, we would require the commodity's price action to substantially breaking the 80.2 support line, taking aim of the 76.5 support level. Should the bulls regain control over WTI's price action, we may see it breaking the 85.55 resistance line and taking aim of the 89.60 resistance level, a level that reversed WTI's upwards movement on the 20th of October last year. Those were the top financial stories for this hour. From Loas here at IronFX, we wish you solid trading.